Dave, watching the stock market recently is like watching a basketball game. It's up, it's down, it's bouncing all around. And we have a 10% correction one day. The next morning, the stock market is up again. Great deal of uncertainty. That's the problem. Nobody knows whether to buy or sell. And this is new in the market. We used to, until recently, people thought things were going smoothly up, and now nobody knows.
Well, I would argue that a lot of the uncertainties that are worrying people now were there a year ago, but we were sitting here talking about how placid the market had been, how smooth everything was. Where was the volatility? I think we said it would come back someday, and it certainly has.
Oh, it's certainly back now. Well, a year ago, they were cutting taxes.
Yeah,
great boost in corporate earnings, but that's been absorbed, and now we look out and we see uncertainty. For the U.S. economy, it doesn't look like there's going to be a recession anytime soon, as far as I can see, but the housing market is kind of slowing down as interest rates have gone up. The auto sales are getting a little shaky. You look overseas, and you have Europe. The economy in Europe stalled out. Brexit is a worry. The Chinese economy is slowing a little bit. And now we have a bit of a trade war.
Italy is also concerned. What's the future of their economy? But I think all of Brexit was certainly known a year ago, and the trade war was threatened, even though it hadn't started yet. Most of this isn't really new. It's just we don't have that backdrop of the tax cut, but we have seen earnings go up more than 20% this year, and the stock market has been basically flat for the year. As you pointed out, we've had a couple of nice ups and a couple of 10% corrections, and it's been pretty much flat. The forecasters still see earnings going up next year, mid-single digits, which is decent. So you ought to be able to count on some forward progress from here.
That's what I think. That's why for the first time in at least 2 years, I've been nibbling at stocks. We have, the overall market is now about 16 times forward earnings. Yeah. I used to think it was way overvalued. Now it's, the earnings have caught up to the stock prices. So I'm buying. How about you?
Well, I never recommend market timing. I think slow and steady, put a little bit in, every month or every quarter, whenever you can. Make your IRA contribution for this year, for soon for next year. It's guessing where the market's going to go next is a fool's game. But I agree with you. I think it's reasonably valued right now, maybe even a little undervalued. What was overvalued, a couple of months ago, were some of the so-called FANG stocks, Facebook, Apple, Netflix, Amazon. Those have come down a lot. I mean, some of them, Apple, I know, is in a bear market. It's down more than 20%. So
they were significantly overvalued. Most of them. Amazon maybe not, but the other ones, they definitely were. A mystery. The Federal Reserve has become a little bit of a mystery. They could throw off my forecast if they should continue to push up interest rates into next year, but they're getting a little.
I think they'll be sensible about that. They see what the bond market's telling them, which was that it doesn't expect as much growth ahead. We technically had a little bit of an inversion in yields recently, which is a bad signal. I think the Fed is watching that. In fact, that could be, if the Fed signals strongly, sometime early in the year that it's on hold for a while. That could be just what the market's looking for, and that could be the next leg up.
So I think no crash, no recession that we can see. Maybe a buying opportunity, and maybe not.